Good afternoon, our esteemed viewers. Welcome back to this week's another episode of the Community Show. This week, I bring you a panel of experienced, distinguished ladies and gentlemen who will help us and understand insurance, because that is something that many of us do not possibly know. You understand, they talk about life insurance, they talk about all the types of insurance. So today we are going to be enlightened and we are going to be educated. So joining me in tonight's conversation, I'm joined by a panel that is very, very experienced in this area. So briefly, I'm going to introduce the members who are on the panel today, and then they'll go ahead and introduce themselves. The first person that I'm going to introduce is called Murungi Asinani Dupri Atenyi. He's a manager intermediaries at CIC Africa, Uganda Limited. Next to Asinani, we have a gentleman called Emmanuel Tumusime. Emmanuel Tumusime is the team leader and risk advisor at ICEA, Lion Life Insurance Company Limited. Thank you very much, Emmanuel, for joining us. Then we are joined by Abida Din, Independent. Abida Din. She's the manager at Independent IFA agency, and she's the manager. She also works with she's an associate world member at MDRT, and she also works with, I think, Prudential Assurance Uganda. Thank you very much all for joining us. And last but not least, we are joined by Lydia Musimire. So I'm going to begin with Lydia Musimire. Briefly unmute. Turn on your camera and introduce yourself, maybe for purposes or for what I've left out, so that let the audience know who you are. Lydia?
Oh, yes. Is it okay there?
Yeah, definitely. You can go ahead and introduce yourself.
Good afternoon, viewers. My name is Lydia Musimire, and I work with EAP Old Micho. For the last 12 years, I've been at EAP Old Micho, and I work as a regional manager. I work as an agent, a risk advisor. Yeah, that's me. Thank you.
Thank you very much, Lydia, for joining us and honoring our invitation. Let's go to Musime Emmanuel. Kindly introduce yourself for purposes of clarity in case I left anything out.
Yes, good afternoon, everyone. Of course, my name is Emmanuel Tumusime, and I work with ICEA Lion Life Assurance Company Limited. For the last 11 years, I've been in the field of insurance, doing both general insurance and life insurance, as we give more insights about the whole classes of insurance and as to why the public out there needs to know and understand the value of insurance. Over to you, the moderator.
Thank you. Thank you very much for that spot-on introduction. We're definitely looking forward to having this discussion with you. Miss Abida Din, kindly unmute, turn on your camera and briefly introduce yourself.
Hi, good morning, everyone on the call and the viewers. Thank you for the opportunity. My name is Din Abida. I'm an independent financial consultant and an agency manager at Prudential Assurance. My core specialization is in families, individuals, and life assurance. I'm very passionate about providing financial security and financial buffers in a whole. Thank you so much for having me.
Thank you. We're looking forward to having a wonderful discussion with you. Last but not least, let us have the gentleman who is left to introduce himself. Thank you.
Yeah, thank you so much, the moderator. My name is Asnan Murungi Dupri Atenyi. I'm a Mchwezi. I work with CIC Africa Uganda Limited as the manager intermediaries. Yeah.
All right. Asinani, I'm just going to begin with you right there. To understand this particular topic, definitely we need to begin from the basics, because we have viewers out there who would want to know what insurance is and what are the different types of insurance. So to unpack this conversation, just kickstart from the point of what is insurance and what is the importance of insurance.
Well, thank you very much. I'll be as very simple as possible. Yeah, so insurance basically is, I could say, a financial risk management tool, yeah, So this provides financial protection against different losses or against potential losses, yeah? In other words, it's a contract that one undergoes or that one undertakes, yeah, between them. So them is the insured and the insurer. In this case, it could be a company, or if we could use a company basically. So, and they get to have an agreement that actually would mitigate a certain loss that may happen in the future. Yeah, this deals with uncertainty, if I could say. So the agreement that they have is what we call a policy in insurance. Yeah, so basically that is what insurance is. Yeah, so there are different types of insurance. Yeah, so I could say health and life is basically what we have majorly looked at here in Uganda. So for health, it definitely helps people access medical services. And we know this has really gotten a lot of adaptability here in the country. So life, in a very simplified way, I could say this basically looks at compensating someone loved ones or next of kin in an event that someone passes on. So there is business as well, business insurance that may protect the business against damages, against liabilities, and other losses, to mention but a few. So yeah, maybe others in Uganda, commonly there is property as well. People insure, like for example, their homes, their belongings, yeah, to mention but a few. And that is basically what I could sum up insurance as. And I think it's very much simplified for our viewers to really know what exactly it is.
All right, thank you.
I don't know if I go ahead to demystify about the need of it.
No, maybe you just briefly tell us the importance of insurance, because you've highlighted for us the various types of insurance that we have. You have defined for us what insurance is. Now I'm interested in the importance of health, business, and property insurance that we have here in Uganda.
So I would go to the main ones that are the basic importances that we could look at majorly. So since we talked about health being the most acquired, so we could say health well-being, yeah? So in Uganda, basically, we have a lot of people who are unserved and underserved, if I could be very particular. And people also earn a little. We are a lot in that category. So we realize that health and well-being is key for all of us, or mostly the underserved and unserved in Uganda. It is very key for us to be able to run our businesses, to do work, and also to live. So health and well-being is something that is always not looked at by people who are health-wise upright, and they actually don't find it essential and crucial to have insurance, so that in case anything happens, they're able to actually acquire health services, and these bills are paid for here and there. Yeah. So I would look at the financial protection. So I would go to still the people basically in Uganda tackling financial inclusion. There are people out there who get loans, who get small loans and big loans and etc. And others, yes, have investments, others have businesses. All this always have to be protected to give someone a very well, someone kind of an economic stability. So if our loans are protected, now I'm talking on behalf of the institution, and even the people out there, if they are protected in terms of in case anything happens to, for example, their businesses and they took a loan, then this is all protected. I am very happy with, for example, the people who are doing micro insurance, their companies like Turaco, and to mention but a few. These have tried to tailor products to help such people to make sure that it does not only benefit the institutions who actually get paid when maybe a person who took a loan passes on. Yeah, but also that person, in case maybe they get sick, in case they get any other issues that would really destabilize their economic well-being, they be able to be there for them. So these products being micro, they have so much helped these people. So meaning that for the financial protection, it is very crucial and essential that people look at this as an importance and they be able to safeguard their business. So there is business continuity. So in case you're doing business and you know that in case of any losses, in case of any liabilities, the insurance is there to actually cover for you. You're able to think of the other times, you're able to project very well. You're able to have your financials stable. You're able actually to continue and work. So in case this doesn't happen, the business is always at a very small second from crashing. In case a fire happens at your premises, in case, you know, any loss happens, maybe by professionals within the company, so you're able to have a very big, tremendous loss, yeah? So it is a very big importance that people get to what? To look at business continuity, that can be brought about by actually being safeguarded by what? By insurance itself, yeah? So I could look at those and maybe a bit of social welfare. You know, having a peace of mind is something that is very important, yeah? So if you know, actually, I love the tagline for Prudential when they say Tuli Nawe, like we are with you, you get it? This really provides someone a peace of mind to know that, okay, in case something happens, yes, I'm assured that there is something that will take care of me. I like also what CIC says, we keep our word. In case you take a policy from them, they'll keep their word by compensating you. Maybe the last one I can talk about economic stability. So if you look at big investments we have in this country, we have Mukwano, we have Harris, we have Century, Crown Beverages to mention, but if you imagine if all these are not actually insured, yeah, and anything happens together with what they contribute, MTN, yeah, and to mention but a few. So imagine if these are actually not insured, imagine if they do not have property insurance, imagine if they do not have the PIs and whatsoever classes, what would happen? These would shut down. They contribute taxes to our economy. So it will mean that them with insurance would really help them to bring about a lot of stability. But when you look at the penetration in this country, actually, you realize that it is actually in the 0 points, not even 1 yet, unless maybe we say we would round off. Yeah, so with a lot of factories, a lot of companies, a lot of businesses and properties out there within the country, if they all get to embrace this, you would imagine how they would be stable, how they would be comfortable to make sure that they continue to do very good projections, to diversify and etc and etc. So in very few points and simple words, I could say this is what I potentially look at as the importance of insurance, basically here in Uganda. Over to you, please.
Thank you. Thank you very much. That has been quite elaborate. What I picked from your submission, you talk about 4 key issues. You talk about financial protection, business continuity, social welfare, and economic stability. Dean Abida, I would like to get to you. Atenyi in helping us understand the fundamental reasons why insurance is essential for individuals, businesses, and society as a whole. My question to you then is, Dean Abida, as you unmute and turn on your camera, as we now go deeper into understanding the importance of insurance, my question to you is, what are the main reasons why people should consider having insurance, and how does it contribute to financial stability and risk management? Over to you, Dean. Yeah.
Yes, kindly just go over the question again. I didn't hear you.
The question is, what are the main reasons why, what are the main reasons why people should consider having insurance, and how does it contribute to financial stability and risk management?
Okay, then I'll just, the gentleman who just spoke a few minutes actually was quite elaborate and said most of what we had to say, but I'll just deep dive into it. Just give me a sec. Why should we embrace insurance? I come from a life perspective, because in insurance, there is non-life and there is life as well. So from a life perspective, what we're talking about here, or rather what we are trying to do in terms of sensitization, is for people to have an understanding that they need to be deliberate and take an active role when it comes to their finances. I know when we look at insurance, whenever we look at insurance, we are looking at risk mitigation. We're looking to transfer risk from one entity to another entity in exchange of a premium. It could be a monthly premium, it could be an annual premium. So I'll just break it down in an individual basis. For example, a life insurance policy. And I will use an illustration, or rather I will just take on an example of a 35-year-old person who has just started a family, has just had a kid, is employed. Why would such a person need to take on a life insurance policy? Excuse me. Apologies for that back end noise. Apologies about that distraction. So basically, when you look at life insurance, most people are thinking about risk mitigation, or they're looking to talk about risk transfer. And we always say it is not only about the risk, because at a point that there is no risk occurrence, there is still a payout. So we need to start changing. We need to have a paradigm shift in terms of mindset. and say, people who take on these policies or people who take on insurance are not people who have the money. Okay, money is an important factor because you need money in order to pay for those premiums. But for as long as you are alive, for as long as you have an income, for as long as you have a family, for as long as you're planning to do any form of retirement, for as long as you're a business owner, for as long as you want to do succession planning or you need to do legacy planning, it is prudent that you diversify your financial portfolio. And one of the things is through life assurance. Now, we always talk about risk. The mindset is such that you're only paid at a point that there is a risk occurrence. But actually, we have curated products in the market to suit our market segment that at a point that there is no risk occurrence, there is always a payout. Case example, I said right from the onset, we have a 35-year-old gentleman. He's just had a 1-year-old kid. This gentleman is in the workplace. He's possibly going to retire as he's 50 or 45. So ideally, one of the instruments that you can partake in as a cushion is life assurance. He can take on a policy and say, I'm 35 years of age. My daughter or my son is a year old. In the next 12 years, or other, let's say the next 10 years, my child will be finishing prep school. So what are the things that I can do? What are the financial cushions I need to partake in order to make sure that in the next 10 years, whether I am here or I am not here, my daughter or my son will be able to have a standard education. Now, of course, all that is dependent on how much you're paying and the tenure that you're doing. So at a point, give example, this person is paying 200,000. I'll just give one of the minimals per month. As soon as this person, let's say Mr. John pays 200,000, they are guaranteed of about 24 million shillings, meaning, Lord forbid, in case of risk occurrence between now, the tenure, between now and the 10 years, we'll be able to pay out 24 million shillings and much more. In the case scenario that this person is unable to work, for example, has been saving this money, this financial instrument can actually be able to suffice as income protection. So this is also one of the benefits of life assurance, or rather insurance, from a life perspective. In a case scenario that this person has been saving with us, for example, look at what happened, the black swan, COVID came. And you realize that most people had been in the working space and they barely even had emergency funds. When I talk about emergency funds, this is having at least your monthly income put aside for 6 months, so that in the case scenario that you have an emergency, you're able to take out that money. Case example, if you earn 1 million shillings, you ought to have minimal, at least 6 million as your emergency fund. So with that said, you realize that at that point when this happened, the black swan, or rather COVID happened, which was unexpected, most people did not have buffers. People passed on, people were liquidating their properties, people were selling their plots at very depreciative prices, people were selling their cars and assets. So insurance is one of those financial instruments or buffers that helps you to mitigate, or rather to transfer risk from one entity to another, and also as a form of income replacement. The other thing is, when we look at businesses in Uganda, partnerships don't last for more than 3 years. There's been a case study and research has been that most businesses don't even last for 3 years. And when the vision bearer or the owner of a company passes on, unfortunately, the companies tend to liquidate and file bankruptcy. But when you have policies like what we have, it enables you to transfer risk. In case you had 2 partners, one of the partners is gone or has a total permanent disability. With life assurance or with these financial buffers, the payout is able to help for the continuity of the business. Hence, that's why we call it business insurance or gap insurance. So in case one partner is not aware, the business does not have to close. The partners do not have to touch the cookie jar or sell certain assets in order for the business to be feasible. So insurance enables them, that payout enables these partners to have something as a cushion for business continuity. Legacy planning, for example. If you look at other countries out there, you find that Asia predominantly and the Jews take this very seriously. You have children, you have businesses, you have educated them, and Lord forbid you pass on. You do not have a trust fund. You have not set your affairs in place. Now, you pass on, you probably have family, you might have a second wife, possibly there is not a will, there's been no will in place. When you have life assurance, it is the only instrument that will pay to the beneficiaries, and the issues to do with probate will not exist, because probate are one of those things that takes such a long and gradual process. Imagine someone has passed on, the family is grieving, financially they are not doing great, they do not know how to, they do not know the runnings of the business, and they are left exposed. So when you have these policies, the payout at least is able to mitigate or at least reduce on those financial implications. So it is very important that people start thinking about it like a will, because even a will, actually a will, someone can contest against a will, but a life insurance policy cannot be contested against. Another reason as to why people need to take on these policies, if you look at the Ugandan, we are a population of 41 million Ugandans, and you say most of us are actually in what I call the gray area, or what we call the informal sector. When you look at how many people voluntarily are paying or rather contributing for NSSF, the number is ridiculously low. So what are they doing to make sure that their retirement is going to be comfortable? What are the things that they have put in place? Ideally, if you look at retirement planning, for example, if you earn 1 million shillings per month, at the end of the year, let's say you earn 12 million, you need to have 25 years of that 12 million put aside in order to cater for you at a point of retirement. Because at a point of retirement, you're not actively working, you may not have financial instruments, or you do not have assets that are bringing in positive cash flow. When you get to a certain age, cash is king. You cannot partake in the daily runnings of the business. So insurance enables you to start cushioning and putting money aside, and it growing brick by brick through compound interest in order to have a comfortable retirement. As a mother, I have a child. I have an 11-month-old child. I need to be thinking, in the next 12 years, my child will be going to S1. I need to start thinking, I am 40 right now. What are the things that I'm doing between now and 60 to make sure by the time my child goes to university or goes to high school, I have a financial cushion? We are not going to say, by the grace of God, when I get there or when I cross the bridge, we'll figure things out. Suppose you're not here. Suppose you have no form of income. Suppose you're not employed. Suppose there's a total permanent disability. Suppose your assets are not bringing positive cash flow. So insurance enables us to do all those things.
All right, thank you.
Yes.
That has been quite elaborate, and I see you, when you're submitting about issues to do with insurance, you're quite passionate about it. And
I'm very passionate about it because we have seen people make losses. We have seen, as a mother, I have seen what happens when it's school fees time and we're actually running hither and thither. Imagine if we're struggling at this moment in time where we're still active. What is going to happen in the next 15 years when my child is going to university and I'm almost 52 years of age? So those are the things we need to have a mind shift. We need to have a paradigm shift. We need to start thinking about saving, investing, and protecting. I am not saying insurance is the only financial instrument. I am saying it is the only instrument that will buffer against your wealth. Thank you so much for the opportunity.
Thank you so much. Definitely, for the viewers who are watching out there, they'll definitely pick a leaf from tonight's conversation and go ahead and talk to any of you on this panel today and get advice on issues to do with insurance. But right now, let me invite Tumusime Emmanuel, then I get to Lydia, since both of you have been very quiet. Tumusime Emmanuel, my question to you, since at the moment I know you're a team leader and a risk advisor with ICEA, and my question to you is in line of insurance and risk management. I would like you to examine how insurance acts as a risk management tool for individuals and businesses. So my question to you, therefore, is how does insurance play a role in mitigating financial losses and uncertainties? And two, can you provide examples of how insurance has been crucial in certain scenarios? Thank you. So Musime?
Yes, thank you, Drake. To the viewers out there, one thing we really need to appreciate is that insurance plays a very good role in our communities and in our financial management. As my colleagues have stated it clearly here, that one of the major roles of insurance is risk management, or talk about risk transfer. So insurance creates one major role of future certainty. By certainty, we mean that we look at our families, we look at our business, we look at our property. So when you have an insurance policy, it means that you're creating certainty. Let me talk about business certainty. We've seen in a couple of years, probably sometimes businesses are vanishing to zero because of certain risks that probably were not catered for. When you talk about risks, we have got bad risks, but also we have got good risks. Of course, we understand that good risks comes with a reward. But with a bad risk, these are risks certainly that will happen, but you don't know when they will. So when you do take on an insurance policy, it creates certainty that in an event a risk happens to my business, there is a fallback position. Okay. Normally these businesses, they are businesses where we have invested a lot of capital, a lot of money. So, but you realize that a business gets shut down in just a second, and you realize that at that point, you find when you have lost all your income. So having an insurance policy creates future certainty of your business. Think about certainty of your family. Okay, you find that every one of us, every day we wake up to toil here and there, but we have those people that depend on our income. So we are looking at an insurance, under life insurance, that in an event I die, because death is for everyone, unless if you don't want to think about it, but it will happen. So what if you died? Today you're still struggling with children. You have a lot of things which are not finished. So insurance says, we want to bring you back in the position, or we compensate your family in an event that life takes a negative twist. Those negative twists, they're the real thing that we really need to insure under insurance. Insurance is one of the tools that anyone out there can use. More so in our generation today, we really need insurance so that we can create future certainty. Okay, so moderator, if I could get back to you about the second part of the question that you posed to me, please can you highlight more on it again?
The second part of the question is asking you to maybe provide for us examples of how insurance has been crucial in certain scenarios, considering that many Ugandans consider insurance as something that, you know, it's not in that line of thought.
Yes, I hear you. Some scenarios where insurance has been so crucial. I will begin from the live example. Of course, I've been in insurance for the period of about 10 years. I've seen insurance, more so life insurance, compensate. For example, post-COVID, especially in the second phase of COVID, you find this man is a breadwinner in the family. He pays school fees, he pays rent for the family, he caters for medical care and everything. But you find this person dies, okay? Or maybe somebody gets critically ill that he cannot work anymore, but he was the source of income. So in that case, buying a life insurance policy replaces an income that in an event of death, in an event that you get a disability or critical illness, a life insurance policy is able to compensate the family, okay, by giving money. Let us use examples of so many numerous accidents that have been happening into the country. Look at an accident which happened recently in Fort Portal, along Fort Portal, Kampala Road, which involved the link bus and the driver, and of course, so many other people losing a life. So we are talking about scenarios like such that if you do have insurance, in that case, for example, linked bus company, so you find that the risk of an accident is catered for. That will mean that the bus will be worked on. In other words, they repair, okay? The insurance company in that case will repair the damaged property, the damaged bus. If it is life insurance, the life of the deceased or those people who perished in an accident, of course, will not be brought back to life, but there is money that insurance company will pay to the family of the deceased. And therefore, at that point, probably the family is elevated financially. The financial distress of the family is a little bit managed, because losing someone is one thing, but of course, stabilizing it through financially is another thing. So life insurance or any other form of insurance is so crucial at that point, in a way that we bring you back at least at a certain level for the family or a business to stabilize, so that you can have a little bit of security that life can move on. Talk about cases like losing a dear one, funeral expenses. Of course, insurance also caters for such cases like that. In an event that I lost my dear one, you find that by the time your dear one dies, at that point, you have spent a lot of money in hospitals treating that person. But on a bad end, the person dies. But again, there is the other added anxiety, the financial distress that comes along. So in that case, you simply buy a funeral insurance policy, and then the insurance takes care of the burial expenses. And such policies are very simple and very cheap. And one thing that is Ugandans we are privileged to is that insurance in Uganda is still very cheap, okay? Because talk of buying an education insurance for your children, it will cost you very little money. In Ugandan ceiling, things that something like 300,000, 200,000, that is a monthly contribution, okay? As my colleague of Prudence has stated it here, that you will find that that money that you can put aside on a monthly basis, it is little money for one to consume in a day, and you cannot account for where it has gone. But committing it to a fund, it will help you accumulate slowly, so that by the time your kid is joining that level of education, you have accumulated enough. But as you do that, you're given assurance that in an event that you suffered an uncertainty on your life, and we are saying that uncertainties can happen at any time that you're not planned for, the insurance comes in at that point and takes on the education of your child up to the end of the period that you agreed with an insurance company. Thank you, Drake. Over to you.
Thank you. Thank you very much. That has been quite elaborate. Lydia, been very quiet. I would like to get to you now. Lydia, my line of thought and questioning is going to be in line of insurance and financial planning. And you understand, I would like you to help us unpack how insurance fits into comprehensive financial plan for individuals and families. So my question to you therefore is, how can insurance be integrated into financial planning to provide a safety net for unforeseen events and ensure long-term financial security? Lydia?
Yes, hello viewers. I hope I'm clear.
Oh yes, you're audible.
Yeah, thank you, Douglas. Yes, thank you for the question. I have a passion in selling insurance and of course enabling people to achieve their dreams as per your question. So, of course, all of us have got dreams. I understand even you, Douglas, at your age, you've got a dream to achieve. And that is what happens to everyone. With financial planning, for all of us, some people plan differently. Some people, of course, basing on our ages. For example, if you finish school and you're going to, you start working, you've got a dream at that age. Maybe somebody is having a dream of, say, buying land or buying a car or helping your siblings in education. To some people, as you age at 30 to 35 years, someone is thinking about, say, marrying someone or educating a child, assuming at that time you have got a child. And then as we age 40, 45, someone is thinking about saving, someone think about investing, building a house for the family, And then as we age 50, 55, someone think about now retirement. How do I retire? And to me, that is financial planning. So when you have a dream, of course, you will not sit down there and begin to say, I will educate my child, say at Aga Khan, or my children must go to international schools just by saying a word. You must put into practice of how am I going to do it? Sorry about that. You must think of how am I supposed to do it? How am I supposed to save and achieve my plan? My colleague so much talked about education, insurance, and as a family, so I will not so much go into that. I will now talk about that investment. Say someone is dreaming to achieve, say having a family house, and maybe is planning or saving something aside to make sure that that dream comes true, of course. So you take up an investment plan. For example, at UAP, we have what we call the Sure Deal investment plan, where we're looking at achieving that very dream that you are going to have. For example, having a house, you make a plan and say, how much will my house cost? Do I have land now? Or should I purchase land today? Then the next 5 years or 10 years, I have my house. Of course, we consider what income levels that you earn, what particular house do you want? Then now you begin dreaming. You know, we all dream. As you close your eyes, you now begin to think of which house can I have? Will it be a flat? Will it be a bungalow? Where will it be in Chira? Will it be in Muyenga? All those are plans. So you make a plan and say, I want to have, say, 500 millions to 500 million to achieve my particular dream of a house. Then you begin to save. You begin to save according to how much you earn, and of course, according to your dream. Some people dream big, of course, according to how much they earn and their income. So what we do is that you will continue saving, save for 5 years. And then after 5 years, you will have achieved your dream because you'll get your lump sum of, say, 500 million or 300 million, and maybe the land was already there. So what will stop somebody from getting such a house? That house will be guaranteed. And you'll find that within 3 to 6 months, someone's house is done. So we enable the person to achieve that particular dream. And remember, as my colleagues were explaining, when we set our target of, say, having a dream house, and maybe you have also put a cost on it, say 300 million or 500 million, and God forbid, somebody mentioned about accidents. God forbid, if such a person die, say in an accident, what will happen to that dream? Being insurance, and the dream is guaranteed that the 500 million or the 300 million will come out to enable the beneficiaries continue with the dream that the person had. That is one of the benefits, that as you're saving, that you have made that particular target that you're looking at in the next few years to come to be able to have that dream. We have got to guarantee that in case of death, that dream house will still be guaranteed because of these life insurance packages that we have, and because they are guaranteed in case of death, in case of an accident, or in case of a disability, anything that will stop your income, anything that will stop a person continuing to work, anything that is going to bring, say, a disease, or maybe somebody's no longer moving, that is maybe a disability, still that dream house will have to come through. So it is either you achieving the dream or your beneficiary continuing to achieve the same dream. So if your dream was to have a house, it means even when there is death, your house will still come through. So to me, I have a passion about such investments because most people have money in the banks. Most people have money in the banks and they're saving there, knowing that maybe I'll achieve my dream in the next 5 years, or maybe I will employ myself. Take an example, I'm a doctor, where in the next 5 years, I want to employ myself. I want to build my own hospital. I want to employ my own people. But you cannot just say it that, you know what, you're having your pot at home and that's why you're keeping your money. Or I'm having a bank account where we are all keeping our money. But you cannot be guaranteed of life that I'll continue saving or I'll continue having work, because anything can happen, an accident, somebody is not dead, but is in the wheelchair for some years. and maybe at work, no one can, be there and waiting for you to get healed for 3 to 5 years. You've been down in the wheelchair, you're hanging legs in Malago casualty. Someone is waiting for you to get healed and then get back to work. No one will do that, of course, with our employment here and our employers. So that is the fact that we've got to think about the plans that we really want to do in the few years to come, and then make sure that we take up an insurance policy to guarantee if I am unable tomorrow to continue working, or if I'm no longer there and I'm a parent, like what my colleague said, or whatever dreams that I have got to achieve in the few years to come, all those cannot be fulfilled when you don't have a life cover. And then if I'm to continue to talk about the retirement now in the ages of, say, 40 to 50, personally, I'm 35 years, but I've already started looking at my retirement in the next 25 years, what will happen to me and the kind of life. You see, to get guaranteed of the kind of life that someone is living right now is also good financial planning, that I'll be retiring the next 25 years. I'm not saving with NSSF with the kind of the work that I do, being an independent risk advisor. So that means I have got to do it myself, and knowing that in the next 25 years, I'll be getting 60 years, and the life that I've been living now, I love traveling, I love staying in a nice home, I like, so how will you be able to accommodate all that even when you're retiring? So the people can begin planning for their retirement at an early age, so that by the time they get there, they're not really worried of what life will be, or maybe thinking about going back to your children to depend on their children. Maybe at that time, they're also not well off to take care of you. So financial planning to me is very key, because we've got to think about a lot of stuff. For example, my colleague mentioned about funeral expenses. Yes.
As you conclude, then I invite the other panelists, and then we can wind up in the next.
Okay, as I conclude, my colleague just mentioned that insurance, people think insurance is expensive. Insurance is cheap, that everyone can afford, even including to the underprivileged, the people who earn so low in the villages, because insurance, when you look at other companies around, you'll find that insurance costs as low as maybe 60,000 a year. That is 5,000 a month, which everyone out there can afford, to make sure that they insure their future, they insure in case of death, because we've seen here, our African culture, someone dying and then your land is taken, just to buy a casket of 500,000, So I'm thinking that everyone out there can afford to buy insurance to cover up all the uncertainties. And to me, that is financial planning. Thank you.
Thank you very much. Atenyi, let me get to you briefly in just 2 to 3 minutes. 3 minutes. I would like you to help us unpack the idea here behind insurance industry and innovation. So I would like you to help us tell us the latest trends and innovations within the insurance industry. So my question to you therefore is, how is technology shaping insurance sector, and what new products or services are emerging to meet the evolving needs of?
Yeah, thank you very much, Drake. I could say in the first place, we could look at it from the penetration angle. Yeah, we were looking at the 0 points. If I could say in 2001, we had 2001 to 2002, we had an improvement from 0.7 to 0.8. Personally, I always want to round off to say 1%. So one of the biggest contributors has, yes, been technology. So if you look at a lot of intermediaries that have actually supported to make the policies easy, to detail them, it has basically been because of innovation. There are a lot of micro insurance products that have come up to basically help the underserved. Talking from the Uganda standpoint, I could say, yeah, these have hugely, yes, been supported by the mainstream. And these have basically been tailored insurance solutions, if I might say. This has basically helped the insurance actually go down to the people. I could say in Uganda, we say omuntu wa bulijjo. So if you look at, I would give an example of CBS Pewosa, a circle that was initially made for women, and yes, after, so they realized a lot of value for men as well, and people joined. Yeah. So by creating products, I could say there is an intermediate called Turaco. They have a product they created for them, a hospital cash and life, which is as low as actually, I could say $1 per month. Which is at least affordable, and this has actually gone to all regions where CBS Peosa is. People have been able to acquire it. So this has, first of all, improved a lot of penetration. And guess what? There is no one who has gone to those areas to make sure that they reach out to these people. These people have as well been able to connect and get their policies over the phones, which connects a lot to innovation of technology. There are products that have been also given out through the mobiles. There is IO that is from MTN. There is one that is the Airtel Center that is from Prudential as well, and Turaco. So these have been very influential, supported by the technology. A lot more is coming. So there is, there has been as well a lot of government support, like from the agriculture side, to make sure that as long as the insurance companies are incentivized and the people, so these are small mandates that can at least help people to realize the importance and also to boost the need for insurance, basically. Yeah. So by having the technology, by having the different USSDs people are using, by having the payment methods as well people are using, so it has brought about a given level of simplicity. Yeah. So there are different USSDs that people have used, for example, on Airtel and MTN, to make sure that someone can easily get a policy, someone can easily claim. Yeah. Because always someone gets a policy, they get an issue. So when it comes to claiming, sometimes they're not paid because they have not made full documentation. So a layman or someone who doesn't have any knowledge about insurance will really take a very long time to get compensation because they do not even know what kind of documentation they should have. So as I talk right now, there are a lot of products from traditional insurance, from micro, that people can actually get off the phone, that people can just press a USSD code, different payments they can use simply because of a lot of payment methods. We have SurePay, we have FlexiPay, we have even through the normal merchants of Airtel, of MTN. Yeah, all these have supported really to ensure that people can access these services. Yeah, so this to me has majorly improved the need for insurance, and we have groups that have intensified a lot of education and awareness. This we've seen a launch by Letshego at least 2 weeks back, and this is going to help people that save people that work with Letshego, the staff, the clients, and the intermediaries involved. So in other words, the improvement is there, and we hope, given how the trends are, if you look at from right 2020, 21 up to 22 and now, we hope the figures are really going to be changing in as far as the penetration is concerned, because of how technology has actually supported the need. So the person, at least the underserved or the unserved, can really realize the need of insurance right now, can really realize that there are those products they can actually get, and they can also understand what it means by uncertainty and how best they can actually handle risk, yeah, in the future. Okay. So that is it. And we've seen also partnerships, yeah. So these have basically been there to be aided by the technology. You realize that an intermediary or an agent can use a different portal to access service and actually reach out to their to their end users, yeah. So this has all been brought about by very good innovation, and a lot more is happening. So there is a lot of regulatory considerations here and there, and also, you know, harmonizing operations. So we have a better future. So we just hope for more and more support from the public and for such kind of platforms to help us really disseminate information to the end users. And we see that at least penetration goes to a given level. Yeah, the need will more and more be boosted. I thank you.
Thank you. Thank you very much. That has been quite elaborate in helping us understand how technology is shaping the insurance sector. Thank you. Dean Abida, let me get back to you. Earlier on, you were submitting quite passionately about the matter to do with insurance. And at the moment, we know very many Ugandans aren't having any insurance policy whatsoever. Now, my line of questioning is going to look at insurance awareness and education. Dean Abida, if you're there, kindly unmute and turn on your camera. So I would like you to help us analyze the level of insurance awareness among the general population. So my question to you therefore is, what are some of the challenges in increasing insurance literacy, and how can individuals be better educated about the importance of insurance? Dean Abida, kindly unmute and turn on your camera. Dean, are you there?
Hello. Yes. Hi, Douglas. Hope you can hear me.
Yeah, sure, we can.
Great, fantastic. I'll just share, allow me. I'll just share the stats regarding penetration. Actually, Uganda is one of the least insured countries in the world. And I'll just give you stats as of 2021 September, we're at 0.86%. Imagine a population of almost 42 million Ugandans. And relatively, that is very low in terms of global average compared to most of the developing or developed countries. But there has been a gradual jump or leap, which as of 2022 September, it grew to 0.876. And that is quite a minimal. I would say it's minimal, but still that is growth. And when you look at this number in terms of gross written premiums, when you talk about gross written premiums, it's money at hand, the premiums that were put as per IRA. We collected we collected 564 billion, and as of 2022, we collected 618 billion shillings. So with that said, there has been a slight improvement, but that is not good enough, because an economy with such a low penetration is not an economy that is thriving. It's not an economy that has buffers. It's not an economy that is going to have a substantial growth. And if you look at Uganda, the economy is such, if you look at the population, it's such a young population. With that said, let's first try and understand why aren't people embracing insurance. In the past, there were issues, of course, when you look at our economy and we look at
it looks like we have lost Dean. So for now, we'll first engage with Tumusime, then we have Lydia. When she gets back on, she will resume where she has ended. But Tumusime, my line of questioning to you is going to be in the role of government and regulations. So my question to you, therefore, is how do government policies and regulations impact?
Hello?
Oh, yes, Dean is back. Tumusime, I'll get back to you. Yes. Dean, kindly turn on your camera. Hello, we can hear you.
Yes, these are one of the issues, technological glitches and disruptions that has just occurred a few minutes ago. So one of the reasons we need to ascertain, why is it that people are not embracing insurance? First of all, it is there's been a lack of sensitization. There is, if you cannot buy what you do not understand. People have not had a deeper understanding of exactly what insurance is. And the mindset has been that insurance is more like dumping money in a black hole. And the fact that we are a population of people who do not have that guaranteed check every month. As I told you, the informal sector is actually the largest sector that we have. That means that the disposable income is quite limited. But you see, the gentleman or one of the members just a few minutes was able to say, you know that you can actually save as low as $10. That's about 37,000 shillings. For 37,000 shillings, you can get a funeral policy that will pay out about 7 to 10 million shillings. So the thing is that people are quick to shoot it down without having a deeper understanding. Also, there's the dynamics of economy, as I said. The disposable income is low. There was also issues to do with mistrust then. You see, most people will say, these guys are great when they're talking to us about insurance. They're great when they come and get the business. But at a point of risk, how are the processes? Is there a lot of bureaucracy that is involved? Is it as seamless as they had promised? Are we keeping our promises? Us in the market, in the space of insurance, are we ethically doing what we're supposed to do? Are we paying out claims? What is the turnaround time? Another also issue that has also been there has been the fact that Uganda went into war. There was inflation and things like that. And people were afraid because certain financial institutions closed down. And people are saying, if a bank can close down, what about an insurance company? So there has been that fear, and there hasn't been credibility from some financial institutions. But as time has gone by, there's been a lot of changes. We have the regulator, which is the IRA, which has set up different structures and different departments to make sure that insurance companies are aligned with the ethos and ethics of practice. You even find that sometimes, even as agents, when the agents who are not ethically selling or selling curated policies as per terms and conditions will be delicensed. What does that tell you? It tells you that the business is starting to gain credibility. And when there is credibility and ethics and integrity, we shall definitely get a buy-in. The other issue we have is a cultural issue and a mindset issue. The rule of passage in Africa has been one asset, which is a fixed asset called land. And most people have taken land saying, I have land. As long as I have land, I do not need any other financial instrument. But you cannot use land as your only financial instrument, because land is a very highly illiquid asset. We need to start changing, and we need to start gradually changing our mindset and having an understanding on financial literacy. How do we have a balanced financial portfolio? What are liquid assets? What are the illiquid assets? Insurance is one of those that are actually highly liquid. When you look at money market funds, i.e. the umbrella trust fund, those are highly liquid assets. You need to have a portfolio with a blend of both liquid and illiquid assets. And insurance gives you that. So there is a need for us in this space to go out there and speak more about the success stories. There's also what we have a problem. I don't know whether it's a problem or an issue or a mindset issue. When people get their payouts, I'll give an example. I've been in this business for almost 5 years, and we've been giving out maturity benefits. Maturity meaning if someone took on a policy, they chose 5 years, now we're cashing them out with actually their maturity money, and this has no tax implication. But most people will not talk about when they receive the money, but people will talk about the bitter taste they have in their mouth. They will not talk about the success stories. So as insurers or people in that financial space, we need to purpose and make sure that we're bringing out the stories, the positive stories out there. Insurance is not only about death. Insurance is not only about permanent disability. Insurance is about life. It is a way of life, because as we transition at every stage in our life, right now, we have people who are 26 on this call. We have people who are 35. We have people who are 40. At every stage of your life, you need to have money. And insurance is one of those financial instruments where you can decide how many years do I want to save for? How many years do I want to invest for? And always cash out that money. So another thing that needs to be done is, of course, regulators. There's been regulation in place, which is being done. One of the things that we're doing, thank you very much, is this call. This call it's enabling us open up and speak to people from a layman perspective on as to why we need to partake in these instruments. Whenever people think about insurance, they think it's a lot of money. It's for the rich. It's for those that have.
Excuse me, then.
Yes.
Maybe as you conclude, then I bring in to Sime and Lydia.
Yes. Thank you so much. Okay. Bottom line is we need to purpose and be deliberate on continuously doing this sensitization. And it is time for people to realize that the best time to plant a tree was 20 years ago. And the second best time is now. Procrastination is a killer of dreams. So let us be deliberate about our finances. Thank you very much.
Thank you. Still very passionate submission, very passionate. Let's get to Musime. To Musime, earlier on I was asking you a question in line of role of government and regulations. So my question to you is, how do government policies and regulations impact the insurance industry, and how does it affect consumers and businesses?
Thank you, Drake. Government regulations have impacted on insurance, I can say positively. because one of the regulations that the government has put in place is the regulating of the industry. So you realize that this has protected both the consumer of the insurance and the providers of insurance policies. So government policies of bringing in the regulation, that is the Insurance Regulatory Authority, we see it has created a little bit more of certainty of business continuity, but also customers have been able to be protected. It's unlike in the past where companies would come and do business before you realize one day, 1 month, a company has vanished and it has gone. Those days are no more today. So we really thank the government for bringing in the regulator, and that, to me, I really believe that it is positively impacting on. It is a positive impact. The other thing is, of course, the government's effort in ensuring that insurance penetration reaches to the ground person. So it is also a positive impact. For example, government has gone ahead to make tax system on insurance policies that, for example, VAT, value added tax. You realize that all insurance policies, they are not subjected to VAT. So I think that is a positive impact. And of course, to the consumers, it gives them a reason to really think about insurance. And you see, if someone has an insurance policy, as we have already said, it gives surety to someone that there is a reason to live. As my colleagues have said, for example, to give a just in 1 minute illustration, let us look about life insurance. If we look at a life insurance policy as an investment tool, Douglas, you may have a dream of, let me say, buying a home in the next 10 years, and you want a home of, let me say, 500 million. So you will set a period that is 10 years, and you need 500 million. Then insurance will tell you amount of money that you're going to keep contributing per month. So you contribute today, you contribute tomorrow. In an event that you suffer a risk in the next month or next year, the policy will stop, and then the 500 million will be paid to your family at that point. So to me, I really look at that kind of financial tool as one policy that protects a consumer in a way that even when you are alive or not, your family is given that financial security. And you realize that in that case, insurance is one policy that you cannot compare to anything in the world, because it gives you money that does not exist, whereby you're contributing 200,000, for example, for a period of, say, 10 years, and the insurance policy, based on the policy they are giving you, it is guaranteeing you over 60 million payable at any point. So I think all those and more good things that the public really needs to look out and then be able to utilize such opportunities that are available. Thank you so much, Douglas.
Thank you. Thank you very much, Emmanuel. That has been quite an elaborate submission. Let's have Lydia, then we can wind up this call in the next 10 or less than 10 minutes. Lydia, I will just have just one question for you in line of insurance and climate change. You understand that when we discuss insurance, definitely we have to discuss the relationship between insurance and climate-related risks. There are people who do agriculture. So my question to you, therefore, is how is the industry, insurance industry, adapting to the challenges posed by climate change, and what steps can be taken to enhance resilience against natural disasters? Lydia?
Yes, Douglas. Can you repeat for me the question? I was kind of far.
I said, my question is, you understand we have many Ugandans who deal in agriculture, and climate change is having devastating impact on our environment and people's crops. So my question to you, therefore, is how is the insurance industry adapting to the challenges posed by climate change, and what steps can be taken to enhance resilience against natural disasters?
Okay, thank you so much, Douglas. these days, what insurance companies are doing actually is that they're trying to sensitize so much people dealing in agriculture, because agriculture also being one of our source of income in most of the Ugandans, especially in those rural areas. People, insurance companies have come up so much with the agricultural products covering the insurance, covering their products, and a lot of sensitization, of course. And being the rural people so much, there is a lot that first of all insurance companies need, with the help of the IRA, even these days through the bank assurance, also so much in the banks, where people are given so much loans, which loans also have to be covered. First of all, how those farmers are being helped is that first of all, they're given loans from those banks. And since most of the banks are now doing bank assurance, they're doing so much of sensitization to the farmers, and especially in rural areas. And so much of the money that they're giving them, the money is also insured. And they also give them some time, first of all, to, the crops, they've grown the crops will grow, say, in the next 6 months, 3 to 6 months. So they're given that time to pay later, for example, when they've harvested. And of course, covering some of the risks that may also bring their products down, or in most cases also drought. So there's so much that insurance companies are doing, and I thank most of them, and also UAP being one of them. So that is how, for now, the agriculture we are doing. And I do so much of life insurance. That's why I'm not able to speak so much about the agriculture insurance. Maybe any other person here to help add if they're doing some bit of the general insurance. Thank you.
Thank you very much. It's fine. You've definitely answered, and it's still okay. That has been a very elaborate submission too. But Lydia, I would like to get to you. Maybe in a few words, you can give us your parting shots and what you can tell the audience about insurance as we conclude in a minute or less than a minute. Lydia?
Yeah, thank you, Douglas, and the viewers. Yeah, my submission as we end this is that I want to encourage most of the Ugandans that our insurance penetration is still low, be less than 1%, but we are so many here in Uganda. And when you talk about people not having what to save, to me, I'll be on the other negative side of that, because Ugandans here really have some money to spend, but only that our savings culture here is so low. So I just want to motivate the Ugandans out there, especially the youth, that as they start working and getting some money, let them begin to do their financial planning very well. Let them start baule, like they get some money to put aside and some money to spend. And that is how we are able to build in the culture of saving in Uganda. When you start as a youth, immediately after school, at 23 years, you get a job, you begin saving, even if it is as little as 100,000 per month. You can imagine by the time somebody makes 40 years, how much will be on the account. So my humble prayer is that we all need to embrace saving at a young age, and that is what will save the next generation. Thank you so much.
Thank you. Thank you. Definitely a call to young people to embrace saving and invest insurance. That has been quite interesting having you on the call. Tumusime, kindly unmute and give us your parting shots.
My parting shot is to anyone out there who has a responsibility, that I mean parents, people in business. You really need to think about insuring, because you will agree with me that everything in life is on one variable, and that one variable is income. It's not all about the amount of assets that you have or the kind of job that you have. It's all based on one variable, and that is income. Okay, so your income, you realize that your income decides everything. So if this income gets destroyed, definitely you need to insure it. And when we talk about your income getting destroyed, you are the income, because think about if in case you died today. So now people don't want to hear about death, but just in case you died, okay, because we have lost so many people in our community, in our families. What if you fall sick? What if your families, your business is no more? So you need to protect that what you have. It's not about your job. It's not about your assets that you have. What you have right now is the income, because it is the income that controls everything. So we need to invest, we need to ensure that income. And the only package that can give you that is insurance. So think about insurance. We have a number of insurance service providers in the country, over 36 insurance companies. So pick out any insurance and be able to do insurance, and probably we shall see the future becoming more and more. At ICA, we say we are better together. So you can always find us on any social platform, but of course, we are available. So Drake, thank you so much for this opportunity, and I wish you and everyone a good time. Thank you.
Thank you very much. We are better together indeed. Definitely people need to embrace insurance. And thank you very much to Musime for joining us on this call. Atenyi, if you can unmute and give us your parting shots and what you tell the video.
Yeah, thank you very much. All I have to say is that conclusively, insurance plays a very, very vital role in modern society. So in safeguarding individuals, businesses, and communities from different uncertainties of life. Yeah, I would like people to really understand this. Yeah, they need to understand this. They pick up policies to make sure that they are safeguarded. So it is always something a little bit hard to explain to the people, but they should understand in modern society, they need this to feel safe and have a peace of mind. Yeah, I always say that before we start to think, let us think about insurance. I thank you so much.
Thank you. Thank you very much for joining us on this and giving us your wonderful insights and expertise in this field. Last but not least, let's have Abida Din kindly unmute, turn on your camera and give us your parting shots.
Thank you very much. Thank you to everyone on the call. My parting shots, today is the youngest that you'll ever be. And financial planning is about setting goals, managing resources, and making informed decisions. We need to stop being spectators and become doers. And with that said, we need to start seeking for financial advisory, because you cannot buy into something that you do not understand. There are many companies out there, there are very many advisors. Do not shun, do not close the doors, because there is a lot to learn. And there's one thing that we need to realize. They say there are 7 wonders of the world, but there are actually 8 wonders. And the 8th wonder of the world is compound interest. Insurance and all these financial instruments or money market funds enable you to grow your income. For as long as you're alive, for as long as you have that variable, which is your income, today is the time to make that informed decision. My name is Dina Bida. I'm a lifestyle protector. I work with Prudential Assurance as an agency manager. Together, Tulinawe, do not hesitate to get in touch. Together, we can make a change. Thank you very much.
Thank you, all of you, for your wonderful insights and knowledge in tonight's topic of understanding insurance. It has been wonderful. Personally, I've learned a lot today. And it is making me think maybe I should go ahead and offer insurance law as an elective in the coming semester. I'm a student of law, and insurance law wasn't something I was thinking of, but now it has given me thoughts to go ahead and maybe pursue it. Otherwise, it's been great, and I would like to thank you, Ms. Abida Din, for your time. I would like to thank you, Mr. Atenyi, Mr. Tumusime, and Ms. Lydia Musimire. It has been very, very interesting and informative having you all on the call. And for our viewers out there, please do reach out to any of the panelists who you have seen today. You can search them on Twitter or on Facebook, though you'll find them there. And definitely you can have the conversation going. Otherwise, it has been great. The crew from Civic Space TV and Center for Constitutional Governance, thank you for making this possible. And yeah, it has been interesting. It has been nice. Otherwise, a good afternoon, and I wish everyone a beautiful and fantastic week.